Ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and today, joining us on the show in person in quite elaborate, lovely habiliments is our friend and guest, David Pakman, managing partner at investment firm and investment advisor, CoinFund. Before we dive in, and we've got a lot to catch up on, I think it's been about 3 years since we last had a proper interview, I want to take a minute to thank our sponsors. Huobi, one of the world's leading virtual asset exchanges, has been providing convenient and professional virtual asset management services to more than 50 million users in more than 160 countries for nearly a decade. At Huobi, their mission is to make crypto accessible, to help you understand risks and make informed decisions to protect you and your assets. Learn more today at Huobi.com. This episode is also brought to you by Ledn. From Bitcoin and USDC savings accounts to Bitcoin-backed loans, Ledn's financial services enable you to benefit from your holdings today without selling your Bitcoin. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. All opinions expressed by hosts and podcast guests are solely their own opinions and not necessarily those of The Blocks. Podcast guests may have taken positions in the assets or other matters discussed in this podcast. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. For full terms, visit theblock.co/terms-service. All right, like I said, David Pakman is on the show. I have to admit, I was thinking about you as I was getting ready because I cut myself shaving. Obviously, Dollar Shave Club was one of your big investments before you got into the crypto space. You were leading venture efforts at Venrock. And then I think about 3 years now that you've kind of dived into crypto kind of fully with joining CoinFund? I know you were kind of doing stuff before that, but...
Well, I think first you got to get rid of those Gillette razors and get some Dollar Shave Club once you start getting cut. I kind of, went into crypto dabbling in 2016, 2017, and, just like everyone else, fell down that hole, and each year got more and more. But I've been full-time at CoinFund for a year.
For just a year? Wow. I mean, crypto it moves so fast. I feel like the last year have been 10 years, right? I mean, so much has changed. Music NFTs have kind of become a thing. You have a huge background in music technology. Is that something that's interesting you?
Super interesting. I'm super interested in it, but it's not happening yet. I think we're all theorizing about how NFTs will impact all of intellectual property, especially digital intellectual property, and music is a prime example of that. But just looking at the numbers, it's not really happening yet. I don't think we've had our sort of CryptoKitties moment, around music yet, or found the right format or pricing mechanism or the right types of artists who will prosper in it. There's a lot of good experimentation. I'm pretty bullish. I have a similar view as Jesse Walden does, which is that the NFT format is the song. We should just sell songs, and artists should sell songs directly to their fans and cut out a lot of middlemen and have some scarcity around it and limited edition and bundle some access with it. But it's just not happening in mass yet, but probably will.
So the firm announced recently a $300 million Web3 fund. How would you break down the thesis behind that?
Well, it's a multi-part thesis. One is we're long crypto. So like everyone else is probably on your show and you guys as well, we have a view that we're building the next version of the internet. It's going to be decentralized. It will mount a severe challenge to the way Web 2 applications are built on top of decentralized networks. And we got a lot of work to do to build that. And then, crypto will probably eat the global financial system as well. And NFTs will impact intellectual property, and we sum all that together in this really big idea, really large amount of value creation. So we invest along the full landscape of crypto, and CoinFund's original roots were as a seed stage investor, and the firm has done very well since 2015, investing in seed stage companies. But we heard from a lot of CEOs like, hey, we love having crypto native investors on the cap table. You guys have been helpful. Can you lead my Series A also? I'm raising more money. Things are going well. And the answer was no, can't, because we don't have a fund that would support that. We saw a lot of seed stage companies graduating to have real progress, and we wanted to invest in that stage too. So we raised a fund purposefully to invest at the Series A, maybe Series B stage of crypto projects that are showing some traction. And now the fund can operate both of those strategies.
Great. So just Series A, do you think you'll get into the Bs and higher up the alphabet?
There's a little bit of theory behind why we like Series A-ish stage companies. Most technology is adopted along an S-curve. Mm-hmm. And venture capital tends to invest long before there's growth, proven growth. And so where prior to the out years of the S-curve do you want to invest your capital? And I think we like seed because if you have good deal flow, you can spread your risk across a large portfolio, and if a couple of them work, you get great returns. We have good deal flow, and you're taking smaller bets. But if you look at that S-curve, just at that moment before the steepest part of value creation is kind of Series A stage, right? Mm-hmm. Like a company showing a little bit of progress. They've maybe showing some evidence of product market fit, and they're going to raise not growth capital yet, but sort of $10, $15 million. We like that because the steepest part of the value creation can happen just after that moment. So that's why we like to invest.
What defines that inflection point for you? I don't know if inflection point is the right word. That turning point.
Yeah, I think it is.
Is it profitability? Is it the size? Is it revenue?
I think it's some demonstration of market traction, and that can come different ways. If it's a developer tool or technology or protocol, then it's like developer usage. Like are people building on top of it and building interesting apps? If it's a consumer application, it's usage or usage over time. If it's a SaaS company, it's probably early revenue or pricing or something like that. So different modes for different types of companies, but there's some evidence that, hey, there's a market here that's interested in your product.
How difficult is it to identify that turning point in something like NFTs or Web3, where the businesses aren't necessarily those SaaS models, so they're maybe a bit more difficult to parse through?
I think your characterization that it could be difficult is true for people who aren't crypto native, because you don't know what to look for. But if you live in crypto worlds and you spend your time in the Discords and you're talking to the communities and you're attending developer conferences, you get to learn about what the sentiment is around particular layers of technology. You can look at GitHub type statistics about adoption and usage, obviously smart contract deployment and on-chain metrics. So I think you can be smart about it. I would say in the absence of competitive capital, you have all the time in the world to look at that data and figure out when the inflection point happens. Unfortunately, we don't live in a world in the absence of competitive capital. So the real, I think, art, if you will, is trying to find evidence of traction before everyone else has. So when it becomes consensus, it prices up very quickly.
There is an abundance of capital, and I feel like too few companies to invest in at this point in time. I felt like a growing new wave of crypto entrepreneurs that came earlier this year, but obviously we're in a more stagnant point in the cycle. How do you elbow your way into certain deals when there are so many new market participants than when you got into the space, and especially when CoinFund launched?
Well, Jake and Alex and the other early members of the CoinFund team have been building a really incredible reputation since 2015 in crypto as thought leaders, and I think as good collaborators. Their personalities are super well suited to working closely with entrepreneurs to help build. They are, I think, authentically interested in trying to build a decentralized version of the tech stack, and they believe in a lot of the crypto ethos. And they've been right early before things have happened. Like Jake called NFTs before I knew what NFT stood for. And they were early on stable coins and, a number of other key pieces of Web3. So I think they've built a great reputation. I've built more of a reputation in traditional tech, and am working to build my crypto bona fides. Some of my investments help with that, like leading the Series A round of Dapper and being on the board there has helped people see that I'm not just a Johnny-come-lately. But I think the firm has worked hard on building that collaborative reputation. And as a former founder and CEO myself, you kind of want to work with people who are going to help you, not just write you a check. And so I think CoinFund's made more than 150 investments since it was founded. And I think their portfolio today of active companies is north of 100 companies. So if you're a founder, you can diligence us pretty well by talking to other CEOs. What are they like? Are they helpful? Are they good people to work with? Are they more than just their capital? I think that's the best way to elbow in, as you say, is to let your track record of helping speak for itself. But there's a lot of sharp elbows in investing, and you also have to be willing to get out there and sell a little bit. I would say, coming from traditional tech, though, I find crypto to be a little bit more collaborative and syndicate friendly than maybe where tech VC is, where there's a lot more in tech VC, traditional tech VC, there's definitely more mature sources of capital that are like, we want to take 100% of the round and don't want to let anyone else in. And crypto is thusly, I think, more, or so far, more collaborative and syndicate friendly. So you can be a part of a round without leading it and still be a meaningful investor.
Why do you think that is?
I think maybe it's just the nature of cryptos. It's being built by a community. I mean, DAOs and everything takes a communal bent to it. I mean, we've got different structures and foundation structures and decentralized mechanisms for building software and running networks that are not the ones that we used in Web 2 with traditional CEOs led, hierarchical enterprises. And so with that amount of, with that sort of different ethos, why wouldn't you want to assemble a community of supporters early on? Just the whole notion of crypto incentives, right? That like the community gets to participate in the ownership kind of lends itself, I think, to a slightly larger cap table.
Yeah, because it's a community.
Right.
It's interesting. So walk us through a little bit about your role at CoinFund.
I think maybe twofold. One is to help bring a traditional venture lens to the process of investing in crypto. It is still, even though we're 10 or 11 years into crypto, it's still pretty immature market. And I think a lot of norms are still being established. So maybe there's some usefulness to having a little bit more traditional investing lens about how do you build a process to make non-consensus investments? How do you train young investors to develop independent thinking? So I would say help a little bit that way. And the other is to make investments. And so I spend most of my time on the Series A fund, the recently announced fund, and a little bit of time on the seed fund. But really focused on finding those inflection point companies and trying to help out. And that's my goal long term, right? Is to build a great portfolio at CoinFund like I did at Venrock.
When you think about the way in which entrepreneurs in crypto pitch VCs, how is it different from maybe the way it's done traditionally? Are there any unique nuances or idiosyncrasies that you found within the crypto entrepreneur community? And what are they maybe doing wrong? What would you like to see changed, perhaps? Maybe there's there's less deference for the venture capitalist in crypto.
Yeah, and I don't think I'm going to be able to get the community to change. It's me who has to change. But I like your question because I struggle a little bit in that almost every meeting is a conversation and not a presentation. In traditional tech, like your first meeting with an entrepreneur is like, here, let me walk you through the deck. And the reason I like a deck is it's an organized roadmap for having a conversation that's meant to answer the 10 biggest questions you've got, right? Who's your competition and what's the go-to-market and who are the customers and what's the business model?
So what is it? Just kind of like what we're doing here?
Yeah, it's more, I've noticed it at least thus far, last few years, it's more conversational and maybe they don't even bring the deck up. And I think that's okay, but it's the less formality of it doesn't let you observe what's the structured thinking behind the founding of the company? All right. When you ask someone a question, tell me the story of your company in 10 minutes. That's an opportunity to use some logic to explain. Here's why I'm here, and here's why we think this makes a lot of sense to do. So it's just a little less formal than maybe what I'm used to. I don't mean to say like traditional venture meetings are formal. They're not, but it's usually with a tool that structures the conversation. And I've noticed just way less than that. And I've had to ask actually for like the second meeting, hey, would you guys come in and would you walk me through the deck? It's like, well, okay, we can do that if you want, but it's just not de rigueur. It's just not the way at least most meetings seem to be done. And maybe that's just a personal preference. Maybe I'm old. Maybe like it's just never going to be done that way again. I don't know. But I find it's less than I get more data from someone walking me through their story.
It makes your job a little bit more difficult.
Yeah, for sure. Not
that it's necessarily annoying.
Yeah, and I don't, to your second part of your question, I don't think it's out of a disdain for VCs. I just think like crypto is so much more like, well, didn't you already hear my story at the, at DevCon when I presented it? Like, I don't need to tell it to you again, right? You could have figured it out. Didn't you read the white paper already? Like, why do you need me to tell you this?
The white paper's there.
Right.
Interesting point. So putting that aside, if that's just the way it is, that's the cultural norm. Just thinking about it in its own siloed world, the crypto entrepreneurial landscape, what do you think some of the biggest mistakes an entrepreneur can make in that early process of raising capital from institutional investors? And I guess maybe people don't have decks in the same. I've seen some pretty bad ones, I will have to say, but well, maybe that's where we can start. Where can they go astray with the deck, and then maybe more broadly? But I'm trying to be very specific here. Put sort of the old world aside. Maybe just taking the crypto world as it is.
Maybe we can dissect like, well, what's the downside of being more informal during your capital raising process? And one of the things that could be could result from that is that you're less successful raising capital. I don't know that that's true, but I believe that it's possible that it's been much easier to raise in crypto for a long time because we had the ICO boom. Now we have, even post ICO, we have like, you can make tokens and do a token pre-sale. That there's an informality about, well, if I don't raise from VCs, there's other ways for me to get capital. The community will fund me. And by the way, that's been true for a number of years during the crypto decade. But in times that we're in now, and that we may be in for some time, being good at raising capital is a required skill for an entrepreneur. It's not so easy as like, I'm just going to launch some tokens and sell them. So making sure you've got a way to reliably tell your story and have a deck that tells it well, I think is a good, important skill. So I would push that maybe this old way of doing things will have some more relevance in the macro environment we're in now.
Yeah, and there's just an abundance of capital at play sitting on the proverbial sidelines that just kind of hover over us like a dark cloud. It's always there, but it's not doing much to help our fallen bags, so to speak.
Yeah, and I'll be interested in hearing your wisdom about when that's all coming in. But I think the burden of proof goes up higher in markets like this, where people want more, investors want more traction or more evidence that there's something here versus like religious conviction that if you build it, they will come. And knowing that it might take longer to build things because we're in an uncertain time, and therefore you burn more capital. So you got to be kind of good at raising capital, and you might have to raise it a little bit more traditionally than the pure, the ways we've raised it in crypto in the past. I don't know. That's just one view. In periods when capital's super abundant, maybe you can be kind of lousy at it because it just finds its way to you. But it doesn't seem like we're in that market right now.
Isn't it funny how in early markets the breakdown or the landscape looks similar regardless of whatever industry you're operating in? We think about the early days of internet music platforms. There were some that were operating in not the shadow, so to speak, but outside the letter of the law. Yeah. We all remember Napster and LimeWire and the like. And today we have a similar situation with crypto. There's some projects that are, a little less buttoned up or put together than others. And then 10 years later, 15 years later, you get, the big giant or giants fall, like Pandora, is effectively irrelevant now, and MySpace, and we have Spotify. How do you think about those evolutions and what threads kind of tie them together?
I love your framing here because there's some interesting analogies, I think, from the digital music wars. In going through that period of uncertainty as music became digital and new businesses came to market, internet music companies, there was some uncertainty about, well, what are the rights required to operate here? Napster took the view that none are required. And Pandora and some of the early folks had to negotiate effectively new licenses that didn't exist. But a lot of the lawyers said there is already very clear laws around copyright and usage here. We don't need new laws for internet music. These old ones are going to hold up just fine. And you had some loud entrepreneurs saying it's all going to be different this time. But actually they were wrong. There were a couple new rights created, or at least some revenue streams associated with some new rights. But for the most part, copyright didn't have to change to allow digital music to happen. Here we are in crypto, and what many of us are saying is these laws from 1933 and 34, these regulations, actually have to change. We need new ones. Everything's different this time. And what you hear from most of TradFi and certainly the regulators, we don't need anything new. These will perfectly apply, and you guys need to fall in line with them under the old, regimes.
So will crypto sort of bend to the knee of the old guard's regulations in the same way that digital music companies ultimately did?
And I agree with your indictment that they did. The digital music companies ultimately did bend to the knee of traditional copyright law and had to negotiate licenses under that regime, which, by the way, make them vastly unprofitable.
Yes.
Like Spotify is an incredible company and a beautiful service and a great product, and it makes no money.
Yeah.
It's not a profitable company. So, what will happen here is the question, and don't have an answer, can't quite predict the future. However, I think some of it has to do with political will, right? Because the thing that would change it would be legislative in its nature, right? New laws or new rules forced on agencies, and those are political forces. And the internet was really bad early on at creating potent political forces that influenced elections or regulatory. But we've seen crypto flex their bags, right?
Yeah.
And so maybe the question here asked is, what is the political will of crypto to force the hand of regulators and legislators to make it different?
Yeah. Well, I think there's definitely a powerful force there. It's money. Music is powerful. People love music, but people love money.
Yeah. So I think that may be one lens to look through what happens here. But certainly the current path with this administration is it's fine the way it is. Now, a couple legislators in the U.S. saying, no, we has to change a bit. So I think this remains to be seen. And by the way, I think most of us would be disappointed if the future path for crypto was purely through the securities laws of the 1930s. It feels like there are modifications we could make to that would be good for the crypto ecosystem. That may not be good for traditional finance, which has a lot of money at stake, but it would be good for innovation. One thing that we proposed during the digital music wars that might be interesting here was safe harbors, which says in this period of uncertainty, as the laws are worked out in the courts and through voluntary agreements and legislation, let's at least put good actors in a bucket that says you're intending to be good, you're intending to comply, but everything's uncertain right now. So as long as you at least agree to do ABC, put some money into reserves for royalties or agree not to, willfully break copyright laws, then you're safe. You don't go to jail. And there's similar questions around crypto, like, can I at least sell NFTs and be certain that it's not a security? Can I at least administer a test that feels like the Howey test and document, as best I can as an exchange to decide which tokens to list, which ones are securities or not? Can I, if I show myself to be a good actor, can I at least not go to jail if we determine later that the rules are different or that the definition of securities are different? And there's no protection for that today.
You said that when you launched the fund that there was a hole for the Series A category. Explain what you mean by that. Why are they not the darling? I guess maybe because there's obviously the seeds are not up that S curve to the same degree. And then you might have some opportunities in those growth stage companies where their valuations have come down by quite a bit. So there's maybe an opportunity there, and that leaves the A's as the forgotten ones.
You're painting, I think, a picture that I agree with. There's a lot of seed capital. So a lot of companies get early stage financing. And when something shows late stage growth, there's a lot of capital for that. It's less risk. Right?
Yeah.
So what happens in between? Where you asked the question earlier, like, how do you know that something's, hitting this inflection point if it's not yet obvious to everyone? I think that largely in any industry requires specialization. It requires an investor who really understands the space, just like it would for healthcare or energy or anything else. So crypto native investors, I think, tend to be better at evaluating these periods of uncertainty between a concept on a napkin and proven growth. And so we just found that there was less capital there. There's plenty of capital for Series A stage tech companies, but there's not tons of crypto native investing firms that are focused on the sort of Series A pre-significant traction. That's why we raised the fund. And we heard that, as I mentioned earlier, from our entrepreneurs. Like, I'd like to raise from a crypto native investor for my Series A, not from just a traditional VC who might have like one partner who does crypto. I'd rather be with a firm that has 10 people who do crypto. So I think that was the observation we made. I'm not saying there's no crypto native capital for Series A, but there is less in that stage than there is in seed or late stage.
Oh, understood. That makes sense. Those poor forgotten A's. My heart skips a beat for them. So walk us through. You were in a meeting today where you had to wear a tie.
I did.
Who were those folks you're meeting with?
Well, I'll just tell you.
Is that on the IRA side?
I'll give you the geographic location. You probably can guess. It was like Park Avenue in the 50s.
Oh, yeah.
Yeah. So a lot of those people still
My
wear
old
ties.
stomping grounds.
Right. Did you wear a tie, Frank, ever?
I used to wear a tie quite a bit.
I bet you have some nice ties.
Actually, I do. When we were in D.C., I wore a tie every day. I got a lot of compliments. There was this conference, the Securities Traders Association conference, when I went in 2019, it's probably 95% ties.
Wow.
And now this year, I think it was probably like 10% or less ties. So unlike today, I was...
You look great. Don't worry. You should see what he's wearing, everyone. It's very fancy. Yeah.
This is all Balenciaga, by the way.
Yeah, I'm going to name drop David Tisch, who's been in tech angel investing for more than a decade. And I remember his favorite clothing style was like luxury streetwear. Now, this is before Supreme and everything popularized
or
that.
Kith.
Yeah, Kith, exactly. Pre-Kith and pre-Supreme, but it was basically expensive sweatpants. And that is his, Dave, if you're listening, which you're probably not, Frank's following your path. That T-shirt is probably, it's one of one, isn't it, that T-shirt?
Yeah, exactly. This is our, shout out to Wall Street Rides Far. Mm-hmm. Thought my dry cleaning would be here, but it was not.
Well, maybe your question about tie wearing.
Oh, wait, we kind of, Well, where are you going with this?
Well, I'm going where's institutional money in crypto?
On Park Avenue.
Yeah, exactly. And what's their pace of adoption here? Going back to your question about are they going to rescue our bags? When does the money on the sidelines come in? And, as an evidence-based investor, there's nothing but good news over time in this question, right? There are more and more institutions offering services for their customers to buy. There's more institutional capital going in. We raised a fund from way more institutional money, about 60% institutional than our previous funds, which were heavily high net worths and crypto entrepreneurs. So there's a steady drumbeat of belief, and strangely, we raised a fund during a bear market
from Teachers Retirement System of Texas, Stepstone Group. Adams Street Partners. Those are some private market investment firms.
Yeah, big ones. I think Adam Street's manages $50 billion. I think Stepstone is like $100 billion. And the turning of the market actually made them more enthusiastic, right? Just, better entry pricing for early stage investors during bear markets. But they didn't pack up and go home this time, which I think we all saw in 2018, right? It was over for how long? And so this time's different, right? I think you see this probably more than I do, but people are still building during this bear market. There's institutional money that's not super scared. They expect things to come back at some point. Crypto's following more of the macro events than the micro ones. It's not like a crypto-specific problem that's led to the low pricing. The question for me is what are the catalysts that drive crypto to outpace the traditional macro recovery? What usage are we looking for? What use cases are we looking for? What demonstrates crypto's health relative to the macros? And boy, that's the fun question, right? And that's the best question to ask, I think, at developer conferences. Is what are you working on and what use cases will it enable that we don't have today? One big one is interoperability, right? Everyone's been talking about this for a year. But if we assume there's going to be multiple base layers, then as a software developer, I want my apps to work across them, or at least allow for cross-chain compatibility and movement of assets. And if we had that, does that make crypto easier to use? Does it obfuscate or abstract away some of the complexities around buying and selling digital assets? And will that be a catalyst for more mainstream crypto adoption? That's a good question.
Huobi, one of the world's leading virtual asset exchanges, has been providing convenient and professional virtual asset services to more than 50 million users in more than 160 countries for nearly a decade. At Huobi, their mission is to make crypto accessible, building the go-to hub for the next billion crypto users. Huobi believes crypto shouldn't have any barriers to entry. Huobi is committed to asset and platform security to help you understand risks and make informed decisions to protect you and your assets. Learn more today at Huobi.com. I also want to give a shout out to Ledn. Ledn, Bitcoin-backed loans and savings by Bitcoiners for Bitcoiners. As we've seen, not all digital asset lenders are created equal. Ledn prioritizes safeguarding clients' assets with its robust risk management approach. That is why Ledn doesn't actively trade or invest in DeFi yield generation strategies with its clients' assets, and only supports Bitcoin and USDC, two of the highest quality and most liquid assets in the industry. Ledn is also dedicated to transparency, which is why they are the first digital asset lending company to complete a proof of reserves attestation. Learn more about Ledn at ledn.io. Ledn, where your digital assets come to life. At what point do you think the usage of some of these platforms, like different NFTs, for instance, at what point do you think the price won't matter, where people will still engage with these products or apps, even if token price doesn't go up? People still use their iPhone and search the internet every single day, regardless of whether or not their assets are up or down. When is crypto that ubiquitous?
Well, I'll take your answer first on that. I guess a few things. I think of NFTs a little bit different than broader crypto asset prices. I think you are describing a known consumer phenomena or human psychology phenomenon that high prices get people to spend, to invest more than low prices, despite the obvious, mistake of that approach. But when I was first digging into NFTs, I read a few articles on why do people collect things? Mm-hmm. Why do humans collect things? I wrote about this in a blog post, but there were 7 different reasons. One of them is because it's an appreciable asset. But only one of 7 is you buy a baseball card because you think it's going to be worth more later. There are other reasons why people collect, to show affinity with a brand or a product or a team or something like that. There's to organize the world. Some people do it because it's a mentally fulfilling thing to do to complete a set. Obviously, for part of your identity, right? Showing off the tribe you're a part of. 7 different reasons. And so some of those are independent of asset prices, which is why NFT volume is not zero right now. In fact, like NFL All Day, the second major NFT product from Dapper, shipped this year. And their numbers, which are public, you can see on chain, are really quite strong. Tens of thousands of people buying, which compared to the 4 or 5 billion on the internet is a small number, but compared to the number of people buying NFTs is an interesting number. So even in the midst of a bear market, like people are collecting sports NFTs. Now asset prices are down, and there's not as much of a mania around it, which might be healthier. A lot of people play Fortnite and play Roblox independent of like what's the external value of the digital goods or the company, right?
Yeah.
So I think that you can build consumer experiences that are not tied to asset prices. But someone else pointed this out to me a few years ago. The crypto world is just like the tech world, where there's a mark to market every day on early stage startups, right? If we marked to market every traditional tech company, you'd have mania around what's happening every day in startup land, maybe very similar to what happened in crypto. So it's somewhat, I think, human nature to get excited about stuff when prices are up and not be excited when they're down. But that's why it's incumbent on us to build some other use cases around crypto other than just like trading digital assets, right? Buying and selling tokens.
Yeah. I mean, you're speaking to a very key aspect of human nature. You see it time and time again with the financial crisis. Everyone needed to buy an investment property.
One thing
this cycle, it was NFTs. Everybody needed their NFT.
Totally.
Because the price going up.
Price going up. One thing that Seth and I talk about, Seth Gins, who's not been on this podcast and really should be. We have to get him on here.
He's been dodging.
Yeah.
He's been dodging us.
One thing that he and I have talked about is in dissecting, like, why was everyone buying crypto in 2017, 2016? And by the way, who were the buyers? Why would you be buying these highly speculative digital assets? One answer was you, as an individual investor, you can't get into tech startups. Mm-hmm. And there was no yield anywhere else on the planet, right? Mm-hmm. And most public tech companies were like, at their 30 or 50% a year growth. But there's no way to get 800% a year growth because you couldn't, right? But you could in crypto. So if we're now going into a world where tech might be muted in its growth, public tech might be muted in its growth prospects, is crypto sort of an unlock again about where you get equity type returns? Yield's good in safe assets now, right? In a high rate environment, you can get your 4% somewhere else. But where will you get your high multiples, particularly if we're going to be in a macro malaise of traditional tech for a long time, which some people believe? So maybe actually this economy will be a catalyst for digital asset ownership again.
I certainly hope so. I feel like, in hindsight, it was so glaringly obvious that we were reaching the peak. I remember sitting in various bars and restaurants, overhearing conversations about how much the waitress made on Dogecoin. And
Right.
I was in LA once, right at the peak, and the two barbers were going back and forth about how they were moving their funds from Kraken to Coinbase to Crypto.com. And it was really like almost everyone, like it had kind of breached the human psyche. Like at some point in time, crypto was, and this is a quote from Sam Bankman when I spoke with him about a year and a half ago, I think. And at the peak, I feel like everyone or most people were thinking about crypto. To some extent, it took up like 15% of their headspace, unless you were over the age of 75 or a child, right? And it's interesting. Like, how do you sort of come back from that after people have been sort of burned? It kind of adds an impediment, right? It's almost like I wish some of these assets didn't have this speculative fervor because it kind of breeds a distrust for when these things become more ubiquitous?
So let's talk about that. I mean, I think this would be a really troubling observation if it hadn't already happened hundreds of times in every other market, right? I think we should just submit like this is what happens in markets. You know, maybe a result of human psychology and other reasons, but like this maybe we should look at as a feature, not a bug, of the way new markets are built out. That we as an early mania. This is the Gardner hype cycle and the crossing the chasm, and like this, you know, tomes have been written about this, academic studies. This is what markets do. So let's not lament that they don't. They do, and you're right. It does make things harder for us now when we're in the trough of disillusionment. But it also helped us attract a huge amount of capital to the space and bring motivated people over to build. You know, one thing we're not spending much time talking about here is like, what is being built right now? And is that interesting? And this is what, through the lens of a traditional tech person, this is the most exciting thing that's happening in crypto. Not the question of like, when will Bitcoin be, 500,000? But are we actually building the next version of the internet? And what will its attributes be? And is that good for the world and interesting? And like, I'm pretty excited by some of the prospects of actually replacing, let's call it the AWS tech stack, with open, decentralized protocols that have the rules of the road can't change on a software developer. I mean, I think one of the reasons this could be very promising is if there's 30 million people who can write code in the world, and that number is going up every year. And if the place they write code is on top of blockchains because they can permissionlessly deploy their dApp, and no one can pull it out of the App Store, and no one can rip the API out from under them if it's working, or demand a 30% tax, that's an interesting motivation for people who write software to build here. And if 30 million people decide like this is a better, or even 5 million people of those decide this is a better place to write software on, like that's a massive fundamental change. And blockchains are going to go from being worth, what's Ethereum worth, 160 billion today, to worth trillions. There's just like, that to me feels somewhat self-evident. So is this an interesting place for software people to build, and why is a really good question. The question we get caught up in a lot is, why do consumers care about this? But that's the second order question. And by the way, consumers will show up wherever the great apps are. Like no one said like, why do consumers care about the first few apps built on the iPhone? It was when you saw Uber and you said like, the only place to use anything like Uber is on an iPhone. Well, then you were like, this is a game changer, totally changes the way I experience life. If developers build amazing experiences on top of blockchains and the only way to use them is to use the dApp, then the consumers show up. NFT digital collectibles cannot be made in a way that are interoperable and, provably yours outside of, proprietary ecosystems until blockchains were created and the NFT standard was created. That's novel. Like that's a new thing. The planet did not have provable, independently owned digital intellectual property that could be scarce. Now we do. I think that's a really big deal. I could be wrong about the timing here. It may not be 3 or 5 years from now. It could be 10 or 20 years. But if we are building a new internet with some of these properties, that's like the biggest idea that anyone's ever had. And that's what attracts me to it. And I try not to spend my day staring at prices on the block and worry about what does it mean for the short term.
Is that why our traffic's down so
just
bad?
Me. Yeah, it's just I'm reading the research though.
Get back to checking it.
I read all the research
incessantly. Some people would say if you're wrong on timing, you're still wrong.
Totally, 100%. That's my biggest worry.
Is that a truism? It
is. No, for sure, especially in venture investing, because your fund life is 8 or 10 years. And if somebody takes 12, like it didn't matter. So this is the biggest unknown, I actually think. Like how long, if this is a new internet, how long will it take? And these things tend to take 10 or 20 years, but we're more than 10 years in. So we only got 8 years left.
Yeah, that's a scary thought. I think about the number of users Coinbase has, and it's 100 million, which
100 million
scares me. It makes me think we're not so early. That's a lot of people.
But that's wallets, because I just looked again, but it's like 9 million monthly transacting users.
Okay, sure.
That's like their active users, and that's not a big number.
No, that's not that many. So where do you think, or where do you find yourselves being the most contrarian?
Well, let's see. I have big questions about, does the token model work at every layer of the stack? So today we know that tokenizing blockchains seems to work. It creates good crypto and crypto economic incentives for miners, and now it creates good crypto economic incentives for stakers, and it seems to create good crypto economic incentives for developers. So we have an interesting open source, a business model for open source software at the base layers. But as we go up the stack and you build other things, data services, AI, personalization, databases, can you tokenize all of that? And will it serve a good purpose? Will developers value those tokens? Will consumers want to pay in them? And can we trade them, and will they have value? If it, and a lot of people in crypto believe yes, but there's not evidence yet that it will work. And so if we're wrong there, by the way, that only certain things can be tokenized and a lot of other things can't, then this might be a little less of an interest. I mean, isn't one of the reasons the block exists because we have more than one or two tokens to talk about, right? So if we have thousands, then you really need the block. If we have 3 or 6, I'm not so sure, the block becomes something different. So this is an open question that I think most people in crypto say de facto it will happen, that I'm waiting for more evidence on. So maybe that's contrarian in crypto land.
Less tokens, although I think we're moving away from the high golden era of the token, of when token, not why token.
Mm-hmm. What else like contrarian? Well, first, I think investing in crypto right now is probably provably contrarian. So all 3 of us in this room right now are contrarian. What else? I think I'm a little more sanguine on the idea that we're going to have a completely different legislative and regulatory regime to run free here. I think we're more likely to be constrained by existing laws than to be able to redefine everything. And I think that crimps a lot of our running room, if you will, right? So I don't know if that's contrarian or not, but it goes back to my comment earlier that there's a lot of political power and money invested in making sure you can't take the entire financial system and just run it on open source blockchains without a bunch of middlemen. There's a bunch of banks that'll have something to say about that first.
Yeah, or they're going to want to get their own version of it out there first.
Well, let's talk about stablecoins for a minute. A demonstrably useful, critical component of crypto. We have questions about what constitutes a stable coin. Are algorithmic stablecoins a real thing, and should we adopt them? For asset-backed stablecoins, how much disclosure is necessary? How much auditing is necessary of the backing? What are they allowed to buy to back it? And do you need a banking license to operate them? Well, if I'm a bank and I'm looking at Circle, or any of the, or USDT, I would probably say this seems to be a really easy business to operate. We're good at holding assets and then making a VIG on it. We should be in the stablecoin business. How can we make sure we're in the stablecoin business? Why don't we lobby that you need a banking license to issue stablecoin, right? Okay, well now all the banks are in, and it becomes a race for crypto startups to get banking licenses, which is, a multi-year process and expense. So I think that's an area where we could see institutions jumping into crypto, but also kind of crimping the entrepreneurial opportunity there.
Bad news. Bad news for Mr. Allaire.
Well, he might become a bank before
I think they're
happens, right?
They're on that journey.
Yeah.
They had a great conference. I mean, it didn't feel like a bear market there, and for them it's not. I mean, they're kind of isolated with rates increasing.
Right.
And they repriced their SPAC because of it. 900 people.
This was in San Francisco or at the...
Well, yes, but no, there were thousands of people, but the firm is 900.
At Circle, yeah.
Which I thought was...
That's awesome. Yeah,
which is awesome.
I want them to succeed.
Maybe one day we'll get there at the block. We're about 165.
Really?
Yeah.
It's fantastic.
There's only 5 of us in the office on a given day.
I noticed that.
Yeah, but it's kind of this is a weird thought, but I always think of Ireland there are 50 million Irish people globally,
right,
but only 3 million live in Ireland. It's kind of like the block. If all 160 of us came to this office, imagine if all the Irish stayed in Ireland, it would just be, it'd be like Shanghai or something.
Well, but you just go to any pub in the world between 5 and 6 p.m. and you can find them all, right? Isn't that true? Yeah. They're
all over the place.
Yeah.
So we just did some math.
Yeah.
And So far this season, we've covered about $1.7 billion worth of fund launches that we announced. You have Variant,
Yep.
Framework,
Yep.
Sequoia,
Yep.
Spartan Group, and Block Tower.
That's great. Well, so that's a good question to talk about is like, notice how many of those are crypto native versus traditional.
Well, they know to come on the show.
Yes, we all do.
That's
It's where the audience is.
And it's funny, you know, so many, I feel like we need to like diversify. We've been having so many venture capitalists on. I don't know.
CEOs.
Yeah, we need more I think they're just busy building.
Yeah, and they only come talk to you when they have something to promote.
Yeah. Yeah.
Yeah, but I mean, that's what we're chasing is meeting all of them. And you do like great research. So
Yeah.
like you're constantly looking at them. You know them.
Yeah. It's helpful. We have this team of analysts on whom I rely, and if there's a guest that I'm not particularly familiar with, I'll hop on the phone with them and just have them give me the rundown. But
That's awesome. It's a great resource. I mean, I plow your site every day to read about something. It's awesome. Like those analysts are super helpful for our job.
what are you most excited about looking towards the next 6 months?
Yeah, so a few answers to that question. I think first, the infrastructure for building robust Web3 experiences is immature today. No surprise there. So there's a lot more of the stack to build. And if you go talk to an experienced Web2 entrepreneur, whether they built a social network or a game or some, even online banking application, the tools and the pieces of the stack that you would build on in Web 2 are more plentiful today for creating that rich experience than in Web 3. We got way more work to do in Web 3. So no surprise, a lot of our investments is still in that stack. I talked about a few. Databases, AI, personalization, interoperability, hiding the complexities of wallets, right? Custodial versus non-custodial, all that infrastructure. So we do have a lot of investing in that stack. Dev tools. I'm still excited about NFTs, gaming, play to earn as an interesting model. The one that I don't see the evidence for yet that I'm super psyched for is learn to earn. And that's because if we already know, as we talked about earlier, that like the crypto incentive model is interesting to people, right? Software developers, some users, the DeFi liquidity pool model of staking. These are all ways to take an asset and pledge it effectively and earn yield on it, earn something on it. So the question is, can you earn yield on your time? And if so, going to human psychology, what do we want people to spend time on? Well, if retraining yourself or learning new skills is something that can earn you economic reward beyond the other job you might get from it, that's really powerful. It's really interesting. So we saw a massive boom in Web 2 online learning, online college degrees, the Udacities and the online boot camps, the ways of learning coding, big change in how learning is done. But there's no economic incentive to do it beyond the reward it may give you at work. But can you earn crypto for learning things? And that's an experiment. It's an open question. I don't have the answer for today, but I'm really interested in that because not only is it a good business model if you can, incent people to use your product, but can we help the world go through a retraining for the online software-based future away from traditional, truck driving or manufacturing industries? And if we can, that's a really interesting way to up-level the workforce.
What do you think your biggest piece of advice would be for aspiring entrepreneurs in crypto?
Don't listen to me. I think build with a purpose, right? Like focus on a customer, an unmet need. Build something that is a combination of where you have some religious conviction about where the future could be, but couple that with evidence, and build to traction. Right? Don't just assume that people show up if you build it, but like get feedback from the market and build along a curve of adoption. You said it already, like if you're wrong with timing, you're wrong. So what is evidence of traction? That is the data that de-risks that you're wrong on timing.
And if you are wrong, then pivot.
Find some traction.
Yeah.
Yeah. So this is not super esoteric advice, right? But we have a danger in crypto of building and just assuming that everything's going to be different and everything will come.
It's not different. In fact, it's very much similar to just the way the world works. Well, David, I'd like to thank you for joining us today.
Amazing to be on this show. I was trying to figure out, are you the Jimmy Fallon of crypto? But I gave that award to John D'Agostino. Are you the James Corden of crypto? and I would say no, because he was just kicked out of Balthazar, I read, and you're not kicked out of Balthazar. You're probably not mean to staff.
Yeah.
So
I'm pretty nice.
Are you?
I did see that.
So who are you? Are you the Mike Wallace of crypto? Are you the Walter Cronkite of crypto? I don't have the answer to this yet. Cronkite with the mustache?
I think we can opt for the latter.
Okay.
But I'll stop you there before my ego just completely balloons out of the room. So where can we learn more about what you're working on? Is there a way for us to stalk you, follow you?
Please. I'm Pakman, Pakman on Twitter. DMs are open. And we are CoinFund.io. Come visit us, learn about us, get in touch. Love to meet amazing entrepreneurs.
Thanks. Today, my guest was David Pakman, managing partner at crypto investment firm CoinFund. Thanks for being on the show.
Thank you for having me.
The Scoop will be back for you again with another great guest. Have a great day. Looking for more great insights from The Block? Check out The Block Research, the premier platform for research content on crypto markets and the digital asset industry. The Block Research membership includes cutting-edge reports, webinars, company maps, and more, available via our dedicated research portal. Visit theblockresearch.com to find out how to join today, or contact a member of our sales team at sales@theblockcrypto.com and let them know that Frank sent you.